following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had a pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate the growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night and a great weekend, folks. It's a TGIF. Don't make assumptions. Just concern the truth. The problem with making assumptions is that we believe they are the truth. We make an assumption, we misunderstand, we take it personally, then what do? We react by sending emotional poison with our word. And this creates a whole big drama for nothing. Market-wise, let's take a look at it out here. We have the Dow Industrials up 34, NASDAQ up 14, S&P's up 3, gold contract flat at $1,203 an ounce, silver down 4 cents, $16.99 an ounce, platinum up $3, $9.39 an ounce. Copper up 2 pennies, $2.58 a pound. Light sweet crude down 91 cents, $48.37 a barrel. Notes: 10-year note up 6 ticks, 123.01. 30-year bond up 4 ticks, 146.30. King dollar down 668 ticks at 101.050. The euro's at 106, and the yen's trading at 114.69. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have out here? S&Ps, we get a flat market. Well, you're up 43 cents. You're 237.29. Bottom line is that it's been testing all day the 238.37. That's the low of the high. What we have out here right now is that you're doing 51 million shares versus 149. Dow Industrials, same type of setup inside the Dow Industrials. What you have at the Dow Industrials out here, Dow right now is up $35. We are at 20,893. And it's interesting, the Dow hasn't been able to make it up to the 20,957. NASDAQ Composite, same type of setup in the composite. Composite right now up $14. The low of the high in the composite is 58.65. We made 58.72. So the composite's going to be interesting to see if, in fact, it's going to close under that 58.65 level. We are going to have lighter volume as we're testing those highs that were generated out here last week. We look at the NDX 100, the 3 Qs. What you have with the 3 Qs? 3 Qs up 38 cents. The high that it's been testing all day out here is 131.68. We hit 131.60. You've done 14 million shares thus far versus the 25 million. Gold contract. What do we have with gold? You're in a Friday. You have gold. Bottom line, folks, it rejected lower price, and you have lighter volume. You have 241,000 contracts. We got to a low out here today of 1194. You are at 1203. You've been coming into the strength from the 17th of January as well as the 31st. It's rejected that low. Bottom line, if you want to see something that's pretty intense, and if you haven't test drive the gold report, folks, now's the time to do it because it's the time to load up. Right now, this is it. And what I'm saying, this is it. This is pretty wild what we've done. So we've come back, okay, last 3 weeks, vicious. No two ways about it. Gold, the equities had topped out. on the 9th of February. We're talking about the 10th of March right now. You came back into the strength that was established out here on the 29th of December. Bottom line, you come back in with dramatically lighter volume. And what you're going to have out here, if you go over to the GDX, what you're going to have out here, you're going to have a rejection of lower price on the dailies, on the weeklies. And if you want to see how intense it is, we talk about a rejection. This is about, never about as good as you can get, because it always can get better. But bottom line is this is what you have. GDX goes down to a price point of 21.14 this week. We've done 245 million shares. We did 444 million shares last week. Right now we're 21.75. All it has to close is over 21.57, as well as you're going into the 543 million shares. So here's your correlation. 543 million shares. Well, it's actually even better than that. You go 636 million shares. That was the downdraft that was established in November before we made the low. You go topside with 401 million shares. You go downtown with 444, and we did all as 245. And what you're going to see as we're coming into the close out here, I expect you're going to see the GDX continue higher coming into that close. And it looks like the way that we're going to be trading out here next week is that bottom line is that, yeah, the Fed's going to go up 25 basis points. But guess what? The damage has already been done. Now you're going topside once again. Bonds, the 10-year note. What you have with the 10-year note is this. 10-year note trading up 5 ticks. It's rejected lower price. You're at 123 flat. Now, I'd like to see this close inside 123. And we're right at 120. I mean the inside at higher than 123. We're right at the swing low that was established out here on the 26th. We go take a look at the 30-year, what we have with the 30-year. 30-year has a little more to go. Whoops, US. 30-year right now is trading out at a price point of 146.27. That has to get up into 147.21. And King Dollar, what do you have with King Dollar? They're taking apart King Dollar out here. King Dollar right now is down 663 ticks. You've done 52,000 contracts. This has done a couple different things, okay? The seller has been continual at the January 5th level. The high of the January 5th level in this contract is 102.420. The low is 101.240. We've been up there many times. The first time that we were up there on this contract was February 15th. Each and every time it sells. This sell here in particular is not only a monster sell, but what this sell has done is that it's broken the uptrend that the dollar has been in since the low that was established out here on the 2nd of February. And that 2nd of February correlates right to when the equities start moving downtown. So what you're going to see, you get a break of the trend, you have wide price spread, you have accelerated volume, you have all of the above. And what does that set up? That sets up silver equities, gold equities. They tested the lows. They tested them in a great way. Guess what? We're going topside, folks. This is Tom O'Brien. This is TFNN. You stay right there. We come right back. Dow Industrials up 39. NASDAQ up 14. S&P's up 4. We're going to right back.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up 36, Nasdaq's up 16, S&Ps are up 3.5. One of the targets, want to take a look at the continuous contract in the dollar index. The bottom line is that the continuous contract is just like the trading contract right now. This has broken the uptrend that was out here since the second with wide price spread, accelerated volume. So bottom line is that we're at 101.205. Bottom line, that baby is going to be going down to 99.195. That's where it's going. So he was asking, what happens, Peter? I'm just addressing the guy that's actually asking. The volume is not correct on a continuous contract. A continuous contract is just strung together. You got to stay with the volume of the actual contract that's trading. That's what I've found. And bottom line, it's huge. We go take a look at a couple of the individual equities, and what you're going to see, this is going to be wild to watch how this is going to shake out. And the reason I'm saying that, folks, is that we came back right where the strength was, and a lot of these equities, they came down hard from where they were, but because they had gone up so dramatically, it can be expected to a certain point. The larger ones, like if you look at Barrick Gold, it did a 50% retracement. That's a normal retracement in a market that wants to go higher. The first run in Barrick went from $13.80 up to $20. So you figure, that's almost 50% up. It did a 50% retracement of that. So bottom line is that it's on the road again. Let's go to Rich in Oregon. Hey, Rich, what's going on?
Hey, Tom. Thanks for taking my call.
Sure. How you doing, man?
Hey, the sun is out here in Oregon.
Hey, that's a beautiful thing.
Boy, you got to believe it with the amount of rain we've had here. So
I bet.
I'm soaking it up.
Oregon's gorgeous, but man, it can be cloudy and rainy a lot. I've got stuck there I was stuck there 3 times, I think, when I was going back and forth to Alaska quite a bit 20 years ago. So I love flying in there when it's beautiful out, and getting out of there is a different ball game.
I understand.
Yeah.
Say, I was calling about Nova Gold.
Let's take a look at it.
What's your feeling about it?
You get Nova Gold. They all look to me like they're bottomed and they're going to go. But let's take a look. So Nova Gold is a large exploration equity. The low is 379. The high's 729. Rejected lower price out here. Went right into the strength that was out there from December and January. And let's put that up. Yeah, and these are all nice, man. This is pretty intense, actually. So when you're looking at these, folks, if you're looking at these over the course of the weekend and you're in this market, this is what you want to, we're going to go through the slow so you can see the correlation. So I'm going to bring you back to actually October, and the reason being is this, is that from July of 2016 down till December, all the equities, all the gold and silver equities went down. They went down hard. When you look at this, what you're going to see is that the week of October 7th, it was vicious. So Nova Gold went from 565 to 408. That volume there was 21 million. Okay, so here, just so you can understand how my theory goes. So you get 21 million there, right? We made the low in December. That test was on 7.3 million, rejected the 21 million, okay? So what does Nova Gold do, as the rest of them did? Nova Gold went from a price of 379 up to 619. Then what do we do? Okay, so we go from 619, Nova Gold's come back down to 469. Last week, we did 18.4 million, okay? So you get 18.4 million. This week, we rejected lower price, and you did 8.8 million. So what I'd love to see when this happens is this. You had the huge sellers down. They got everyone out in October of 2016. They got everyone out last week. Guess what? This is it. That's how this is set up. And they're set up like that on each and every one of them. You know, so now your first resistance, I suspect, in Nova is going to be the 550 area. Where I'm going with the 550 area, Rich, that is the lows of the first high that was established out there on the week of the 10th. But it looks to me that we got action. And it's so counterintuitive to what fundamentally is going on because, you know, my take is that, you know, we get the 15th next week, okay? Well, the 15th is what, Wednesday, I think, right? Yes. Yeah. And they're going to go up in the rates. But guess what? They're going to go up in the rates, and it looks like to me that the dollar's still going to go lower. And what you have here, and a lot of this, folks, has to do with more than likely what happened this morning over in the European Union. The euro right now is on a tear. The euro is at 106.98, and what happened is that you talk about a leak. This was an official leak from the European Central Bank because, well, when you read it, it's amazing when you read it because what they're saying. Tommy and I show this morning was going through this, right? So this is what it said. It said specifically that the European Central Bank, folks, was talking about actually going up on interest rates even when they were still buying bonds. And then when I say it was an official leak, wait to hear this. So the Euro area central bank officials asked not to be identified because deliberations were private. So they gave this to Bloomberg, and this is when you actually saw the dollar start getting destroyed, the euro start going higher, and you know the actual physical metal didn't go higher. But what you did have is that the equities took off immediately. You know, so it looks to me like what you're going to have is that we're going to go up on rates, but guess what? The European Union is going to go up on rates, and if that's what we get, then that is saying that we have inflation that is running out here, evidently. So,
yeah, like the Fed never ever recognizes the fact that what everyday people have to pay for, like utilities, etc. They've been going up for years.
I agree. In food.
Yeah,
food,
exactly.
And if you have children, you're going to put them into school. The schools have got away with murder. The schools have been able to, you know, they've been able.
They're not looking at what everyday people do. I mean, these Fed governors ride around in limousines, and they're protected by, U.S. Marshals. But, you know, when's the last time they ever had to pay a water bill that went up 4.5%?
I would say that about most higher officials in the government. They don't carry money. I agree. No. Yeah. They don't go in a supermarket. And when you go in a supermarket, folks, what I've seen is this, and this is, I can't stand it, that when you see a mother and a father, you know, and a family, and, you know, they're going on the outside of the aisles and they're looking at, you know, meat and fish and they know that, you know, they have a hard time to say, okay, can we buy one? Can we not buy one? That's pretty intense, man. And that's real. You know what I mean? So it's been going up, and, we'll see where this baby shakes out. But it looks to me like we get a bottom here. And we're going to know quick enough, too. And believe me.
What would I need to look for in Nova Gold to say, uh-oh, I made a mistake because I entered it?
You would not want right now. We had a hold here, and we did, and I don't want to be back down here at all, period.
No.
Yeah, I mean, this thing should go, and should go right now, and I'm talking about all of them. What happens in this business is that all these are mostly trading together. Some will be stronger than others, but they're trading together, and what it's saying is that the dollar's going to go lower. Dollar goes lower, commodities are going higher.
Okay.
Cooking, brother.
Get on that horse and ride it.
Ride it, baby.
Yeehaw.
Yeehaw! Have a great one. Have a safe one. You stay right there, folks. We'll be coming right back. Dow's up 41, Nasdaq's up 19, S&P's up 4.5. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 52. You get the Nasdaq up 22. S&Ps are up 6. And as you come over to our website at TFNN, you're going to see right on the front page, I'm going to be doing a live event. This is next Saturday. So if you want to come down to Tampa, get a great education, free. You can have a thank you for the Nadex. Nadex is sponsoring this workshop. The workshop's going to be at the Westin Tampa, 7:30 to 8:30 next Saturday morning. We're going to be checking in. We'll do a continental breakfast. Then I'm going to be doing a 75-minute session from 8:30 to 8:45 rather, to 10 o'clock. That session there, we're going to be talking about quality volume, cause and effect, and the measured moves in the marketplace. We'll take a 15-minute break. I'm going to do an additional 75 minutes. We're going to be talking swing points, testing, and Tiger Gottlieb buys and sells. Now, the testing, that's what we were just talking about, all the gold, silver, what they've been doing, and how important it is to really understand what this testing procedure is all about. Then we're going to take questions, 11:30 to 11:45, and then we're going to have a Tiger luncheon, and it's going to be a cash bar. So we're going to have a Tiger social from 12:30 to 2:30 in the afternoon on the roof overlooking Tampa Bay. It's going to be a great time, folks, a lot of great education. What comes along with this also, courtesy of Nadex, is that everyone there is going to get a signed copy of my book, The Art of Time in the Trade. So checking out the front page of TFNN. And as you're over at TFNN, if you haven't test drove the gold report, folks, go do it. You get 30 days free, bottom line. And all you folks, if you don't want to test drive the gold report, that's fine. But if you want something that wants to run out here, out here today, you can buy these golds and silvers, put the stop right underneath where we are right now, and I think the reward versus the risk is pretty good. The counterintuitive deal out here, there's no two ways about it, has to do with the aspect that they're going to raise rates 0.25%. I think what you got with that jobs number out here this morning is that the market was almost pricing in the aspect that there was going to be more than 3 rate hikes in the aspect of this coming year. Now, the jobs number was a good jobs number, but inside that jobs number, it wasn't that the pay scale was going up dramatically. Yeah, so in that context, it looks like 3 would be it. And if we take a look at the world interest rate probability screen, what you're going to see is that, of course, we get 100% probability this coming on the 15th of March. That being said, the next one pushes off. And it stayed the same. June 14th is a 50% chance of the second rate hike. May 3rd would be the next meeting after that, and there's only a 10.5% chance. So bottom line is that, the short-term rates I expect are going to go up. We'll see what they have to say about the correlation of how fast they want to do the next rate hikes. What you absolutely have, though, is the aspect that if, in fact, Europe decides to start going up, what you're going to see, because this is where the whole battle goes between the correlation of what the rates are in Europe versus what our rates are, because when you still take a look at this 10-year note, we are at 2.5%. France is at 1.1. Germany's at 0.4%. Italy's at 2.3. So it's hard to really comprehend on a fundamental basis how many of these countries in Europe can be still so below our rate structure. And so that's the way the correlation goes with the aspect of currencies, because currencies are what are moving this market right now. If we go over to the yen, you take a look at the correlation. The yen has a direct correlation inside the aspect of where the metal goes, meaning gold and silver. And what you had with the yen out here today, the yen got to 115.51. And that's the top of the range. 115.62 is actually the top of the range. When you look at the correlation of the exact same dates, it's pretty amazing, because it was January 5th. That is one of our huge benchmarks inside the dollar. Well, it's the exact same benchmark inside the yen. And if you happen to be watching Tiger TV, I'm going to put this up so you can see just how intense it is. It's pretty amazing, actually. It is a direct correlation. So 115.22, January 5th. That was the low. That's where everything started moving around. We made it back up there in the yen on January 19th. We made it back up there on the 27th of January. We almost made it back up there on the 15th of February. We did make it back up there today, and guess what? It gave it up and gave it up in spades. We went from 115.51 today in the yen. Right now you're at 114.70. So what you have a failure on price. Bottom line is that you can't bust them up. Guess what? It's going to try to bust them down. That correlation of busting them down should put more juice inside the actual metal. It looks like the equities are going to be running first. We go over to the XAU. What you're going to see with the XAU right now, the strength in the XAU started at $78.83, actually $78.11. We got down to $77.80 today, a rejected lower price. Bottom line, taken off from that point. We go to the Gold Bugs contract, the HUI Gold Bugs contract, where that strength started from was 179, and the Gold Bugs contract got to 181. Right now, you're up 580. You know, in both cases, your next leg up, it looks to me, the benchmark that you want to be looking at out here is the 27th of February. That's where we'll get the first flack. The reason I'm saying that would be the first flack, that's where the indices, the equities, the XAU, the HUI, that's where it's fast, furious on the way down. We went from $211 to $195. So that level right there, it's going to need some force in order to get through that level. Let's go over and we take a look at the broad market. So the broad market out here today, what you had inside the broad market, you know, take a look at the S&Ps first. So your S&Ps out here, one second. Okay, ESM7. Your S&Ps out here, this is what you had. You had we got as high as the 2376, came down fast, just like yesterday. You know, made it all the way back and is trying to claw its way back again. We made it down to 2359 today, and we'll see where this baby ends up shaking out. Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
Hey, Tommy. Thanks for taking the call. How are you?
I'm doing great, man. Yourself?
I'm doing really well, thank you.
Cool, man. Ready for a good weekend?
Absolutely.
Good.
How about yourself?
Oh, yeah, totally. It's always a beautiful thing.
Always, huh?
Yeah.
I'm calling about the Nugget. You've been kind of covering the miners and stuff, but I did buy that this morning. I'm in at 750, and what I saw on that chart myself, and I wanted you to kind of, you know, run it past you and see what you think. I'm, you know, talking about the Nugget specifically, and
sure.
I'm sure it will correlate with the GDX. But
yes.
It looks like we are coming back into that sign of strength back in December.
Right.
With lighter volume, and you know, each day the volume's kind of, you know, lightened up, and then today we actually have an expansion of volume going the other way up.
Right.
And so.
Just stay right there. We'll have a quick break and we come right back. Our phone number, folks, is 877-927-6648. And, you know, we got the GDX right now at 2186. My take, folks, is that we commit to this close, that GDX is going to be running to 2212. Where I'm getting the 2212, that's the high of the week. That'll be about as good as you can get. We'll come right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We have the Dow up 40, NASDAQ up 19, S&Ps are up 4.5. We're talking with our man Brent from Martinez, California. We're talking about Nugget, folks. Nugget is the direction 300% bull position of the New York ARCA Index. So, yeah, the GDX. You know, you've heard me, man. I like the setup. That's the bottom line.
Yeah, I'm really encouraged by the fact that, you know, the gold held in there nicely today. You know, putting that low this morning or, you know, early on. And the fact that it kind of hung in there on a Friday, that's encouraging to me. And
it's huge.
So my plan is to hold this over the weekend. I'm going to, you know, sometimes I wouldn't do that, but in this case, I'm going to go ahead and hang with it over the weekend and have a little bit of a cushion, and yeah, we'll see what happens. But I like what it's doing, and I think it's worth holding over the weekend.
I listen, man. You listen to me long enough. I never go out here and just tell people to buy. My take on this today, man. You know, and I know that a couple of tigers in the den are saying I try not to get too excited. Meaning, and I agree. There's you know, we've been in this market a long time, and all of the above is true, folks. Okay, but I agree, Brent. I think this is it, man, and I like the deal. I like the deal in a big way. Hey, we'll see what happens, but this is. Well, you know, I'm doing that workshop next week. This is the key on this one here, folks, about how the tests get done have to do. It actually doesn't have as much to do with how it's tested the January and December swing points. It has to do with the flush out that was established already in October and November of last year. They got everyone out then. That's what it has to do with. You know, if we look at the GDX, watch this, folks. Look at the GDX. In October, you did 583 million shares in a week. In November, we did 36 million. We came down last week with 444, and it rejected everything with 252. So that correlation is 252 against 444 against 636 against 583. When that's set up, I like that deal. And, you know, that's saying to me that we're going to have the bounce. Now it has to prove itself, folks. Now it has to prove, the GDX has to prove that next week it can run up to 2273 and get into that downdraft, because that was a vicious downdraft. That was when we went from 2458 to 2273. It has to, what I'd like to see is that you get up underneath that, you build some cars, and then you blow right through that. So.
Yeah, the other thing, too, I'm happy to see is that looking at the currencies, you know, the Japanese yen and the U.S. dollar
big time,
seem to be cooperating as well. They kind of seem like they put in their tops today, so that's good to see as well.
And it's counterintuitive to the aspect of, you know, them continuing that, hey, listen, the rates are going to get higher. So we'll see where it shakes out, but pretty wild, man.
A lot of times that's the way things work, you know. It's people have their... you know, conventional wisdom doesn't always pan out. So
no, I like it when the the aspect is divergence in a big way. And that's, to me, when I'm looking at that, that's pretty heavy divergence. I don't think anyone was expecting that the European Central Bank would come out and turn around, and say that, hey, they may be going up on interest rates while they still get the bond buying program. And see, what the European Central Bank did do yesterday, folks, and this is, if you should read through this a little, because what had happened is this, is that their bond buying program was staying at $80 billion this month, but it was going down to $60 billion next month. So they were bringing that down like ASAP. That's when I saw that, I said, okay, man, they're leveling off and they're coming down very quickly. Now, they're the ones that let that out today. So them letting that out, it's almost like our Fed governors turned around and, you talk about hammering the interest rate structure 2 weeks ago, folks, okay? Bottom line, no one was expecting short-term rates to go up in March. Well, guess what? Janet Yellen sent them all out, man. She sent those troops out, and one after the other, right? That was amazing last week, right? Yeah, we're going up. It's not a dead meeting. It's not a dead meeting. We're going to go up, and sure enough, and I think that's what the European Central Bank decided to do today before the weekend. So next week, I suspect the same thing's going to happen. They're going to be saying, hey, guess what? We're going up on rates.
Well, thank you very much, Tom. I always appreciate your help, and just have a great weekend, and I'll talk to you soon.
Okay, you have a great one, man. Have a safe one. If we go take a look at some of the, let's go over to Sam Adams, okay? So Boston Bear, this thing is getting hammered out here today. It's down $5.10. And Tommy and I, we were talking about this on our show in the morning a couple weeks ago. And what has happened here, folks, is that there are so many craft brewers now that this equity has been getting killed. I mean, this has gone down from $325 in January of 2015. What it's doing right now, it's going after its lows, and it's going after its lows with monster volume. It very well could be a very large ABC structure on the way down. The fundamental news out here today is that the guy that started this company, bottom line, who's I believe just still the CEO. Let me see, Jim Koch. Yeah, he is. Okay, so the news is Boston Beer founder Jim Koch reduced his common stock holdings by another 12,800 shares on March 8th, representing the vast majority of the company's insider activity in 2017. Since 2012, Koch has steadily reduced his stock holdings of the company primarily by converting a portion of his Class B voting stake into Class A non-voting shares. Koch's stake fell 23% to 3.5 million shares in 2016. From 4.5 million in 2012. So you can see, bottom line, he's not only selling, he's selling all the way down. And of course, the stock is still at a high price. And it looks to me like this is going to be a large ABC down. If it is a large ABC down, this is going to be really trouble because your 8-point on this. Let me see, conservatively, it's 260. It's a big man. It's like 115 A to B, which would get you trading into approximately this $85 level. And right now you're at 146. And you can see how you could get there pretty easy because at 91 on the way down, this was trading 91 in 2011. Bottom line, you want to see how you get volume off the high and then you just keep breaking lows and you break them with volume. That's where this baby's going. So he's getting out as fast as he can, and bottom line is that no one should be buying it, when you got the owner coming out as fast as you can. We go take a look at the, let's go take a look at the silver contract, SIK. So silver, what are we doing with silver out here? Silver right now, same area it went into, 17, no, 1 second, hold it. I got to pull up. Make sure I'm on the right contract here. All the contracts are rolling right now. So silver, yeah, I was on the right contract. Okay, so we're in the May contract. Silver has done 72,000 contracts out here today. Coming into the exact same area. We're at 1701. Yeah, you want to see silver, I want to see silver get inside 1718. You know, silver's, you know, no doubt, you know, over 16.95, you get a rejection of the weekly, but I do want to see more force in silver. You stay right there, folks. We'll be coming right back. Dow Industrials up 48, Nasdaq's up 21, S&P's up 6.5. We're going to be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go and take a look at the SMHs for one of the tigers out here. The SMHs, folks, is the VanEck Vectors Semiconductor Index. The low for the year out here is $50. The high is 78. Okay, so this has been laying out at highs out here. You got to a price point today of 78.13. You're at 77.89. You'd love to, if you're, I suspect you're trying to sell this thing. You want to close on the 77.82. You're at 77.89 right now. Yeah, and it's been up here on, you know, basically no volume for a long period of time. It looks like it wants to pull back to that 73.82 level. If we take a look at what the highest weighting structure is inside here, you have Taiwan Semiconductor and Intel. Taiwan is 12.5%. Intel is 12.4%. So as we go over the weekend out here, folks, okay, bottom line is that what it looks like, if we go back to that dollar index for a second, what you're going to see there, hammering the dollar, DXM7. And what the dollar has done, it was a straight line move down from the 101.845 level to the 101.075 level. Now that's broken that whole uptrend that has been in place since the 2nd of February. That being said, that's number one. That means it's going to go after 99,114. But what's game here is the 98,830. As we said with the, we were talking about the yen. The yen is the same type of situation. What the yen has done, the yen just went from 115.51 down to the 114.67. So that's saying that the yen is going to go back in to try to get the other side of this consolidation that it has been in, which is 111.60. Now, the yen has been in this consolidation since January 5th. In fact, all these, the gold contract, silver contract, dollar index, yen, January 5th, right across the board. That's your benchmark right across the board. Here, yeah, let's go to platinum. We'll do the platinum, same deal. They're all going to be the same, which is pretty cool. But we take a look at platinum. Platinum is up 370 right now. Platinum contract came down into, you've done 20,000 contracts in platinum. We are into the exact same, pretty amazing, the January 5th level, 944.20. What you'd like to see with platinum, now this is what the difference is, that you'd actually like to see that platinum close over 944.20. So on platinum, I'd wait for another day. That's how I'd shake that baby out. As you come over to our website at TFNN, folks, next Saturday, a week from tomorrow, come visit us in Tampa, Florida. Nadex is sponsoring a workshop. I haven't done one of these workshops in a long period of time. Check it out right on the front page of TFNN. That workshop is going to start at 8:30 in the morning. It's going to go from 8:30 to 12. Then we're going to have a Tiger Luncheon. We are going to pick up the Tiger Luncheon. It's going to be a cash bar. So check it out on the front page of TFNN. And if you haven't test drove the Gold Report, folks, great time to do it. That's the bottom line. You can test drive the Gold Report. The way you do that, come to our website at TFNN. You go to newsletters. You go to investment newsletters. You can test drive the Gold Report 30 days, absolutely free. And as I said, as we've been going through this program, not only the metal contract, the XAU, the HUI, they've all tested the exact same spot within 4 or 5 days. Dramatically lighter volume. They rejected lower price on the daily, rejected lower price on the weekly. Now they got to prove themselves as they want to go topside. And so next week is going to be an exciting week. There's no two ways about that. The euro took off and took off in a big way. The euro, by the way, the euro in 6 hours just took a 1 full month back, folks, okay? That is pretty intense. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great weekend, safe weekend. Look forward to speaking right back here, 8 o'clock, Monday morning. Wow! Go get them, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.